Good afternoon, everyone, and welcome to our YouTube live presentation, Trending Thursday. My name is Glenn Tompkins, Senior Instructor here at VectorVest. My pleasure to be here. Always enjoy being here for these social media type events, Trending Thursday on YouTube. If you are here, ta-da, there we go. If you are here and you feel compelled to chat in, by all means do. Let me know where you're from. Let me know something. Just say hi. Say, I don't care. But everybody can see everybody's typing here. And I know that Jake is Brian. I know that he's Brian. And Rich, sorry, Trade Shark. No, you cannot type your stocks in the room now, but I will give you an opportunity to do so. Asif is here. Good afternoon, Asif. Good afternoon, Joff. Good afternoon, Paul. Siberium. Audie, good morning from Stockdale, Texas. Is that a big place in Texas? I don't know. Sitting side by side with me, my good friend. I was trying to think of a lot of good things to say, but it's Joey. it's just Joey. Joey is my producer. Say hi, Joey.
Hello.
Yeah, I said say hi.
Hi.
There you go. Joey and I went to lunch today together. We went to McAllister's and had fun. We try to bond because we do sit side saddle in these presentations. He has the opportunity to help me to look good on screen, which is not much work for him to do. But I am here, he is here, and this is how we get these presentations done. Thank you all for supporting them and coming out. We do appreciate it. Jake's message, what did Jake say?
He took it away.
Gosh, how barbaric. Stop. Wow, what did he got 5? Wow, I don't know what he did. Compatriot, I guess you can call him my compatriot. Wow, that was loud. All right, Joey Bag of Donuts. You better watch out, Trade Shark. He's gonna put you in timeout. I like that. Look at you. We can get that to go viral. Hashtag just Joey. I like that. Hashtag just Joey. What am I trying to be here on YouTube? I don't want to be whatever.
Ninja?
Yeah, I don't want to be the ninja guy. I got to be somebody on here. How about hashtag stock guy?
Hashtag stock guy.
You like that? Let's make that go viral on YouTube. Hashtag stock guy. All right, that's it. Hashtag stock guy. You guys good with that? So we're going to see if we can make that go viral. I don't think there's a stock guy out there. Is there? Do you know?
Probably.
It could be. But hashtag stock guy. I like that. All right. With that, for those of you who are brand new, thank you for being, wow. Rich says that was lame. He's such a hater, isn't he?
I put him in timeout.
Oh, you put him in timeout? He doesn't even know it. Such a hater. Good gravy. Is PewDiePie,
man.
PewDiePie still the biggest YouTuber? I don't even know who PewDiePie is. You know who PewDiePie is?
Yeah.
Oh, you do?
Yeah.
Oh, then maybe I want to be the next PewDiePie. I don't?
We're good.
Oh, we're good? All right, Joey must know. Huh?
You just be stock guy.
All right, Joey must know more about PewDiePie. Yao, hashtag stack guy. What about UAA? What's that? All right. Well, I like hashtag. You want to? Oh, hey, yo. Okay, you said we're gonna give you an opportunity, Simon. Towards the end of the presentation, I'm gonna give opportunity for you guys to put some stocks in of your own to take a look at. So make sure you write them down when we give you the okay. Do not do it now. Do not listen to Trade Shark. Don't start typing your stocks in now. All right, not yet. Hashtag Glenn Dog Rock Stocks. Maybe not such a hater after all. I sort of like that just a little bit. All right, new people, welcome. What is Trending Thursday about? Trending Thursday is about taking news, stocks that are making the news. We analyze those stocks after we look at the stories, whether good or bad. We look at the stories, and then we use the VectorVest software to analyze the stock, and then we look at the graphs. So it's sort of kind of like either a confirmation of the story or getting a better view of the stock, even though the stock made the stories or made the news. So that's what we do. Don't believe what Poe and NYT.
Post and New York Times say about PewDiePie.
They just, I don't know much about PewDiePie. You need a drink. Oh boy, here we go. All right, so that's what we do here. And, excuse me, we always start off by looking at what's going on in the market. So let's start off there. Let's go to the home page of the VectorVest software. VectorVest is a stock analysis and portfolio management software. We've been around for 30 years. We analyze stocks better than anybody out there for value, for safety, for timing, and we also time the market. For any of those who feel that it's not plausible, that's possible and plausible together. If you don't feel that it's possible to time the market, well, for 30 years we've been timing the market. But when I say we time the market, we don't predict which way the market is going to go. We track the trend of the market and we keep our subscribers on the right side of the trend. That's what timing the market means to us, and that helps you to stay on the right side of the trend of the market at all times. So what we're going to do on the home page, this is what it looks like when you first open up the software. And on this home page, you're going to get a plethora of knowledge to help you to dissect what's really going on in the market, to get a better feel on how to, one, invest in stocks, buy stocks, not buy stocks, or how to manage the current positions that you hold. So put all of that together, that's what we're going to do. Plausible is a Glenism. I like that, plausible. It's possible and plausible, makes it plausible. And David's not here, but that's a good Glenism. I like that. All right, so with that, let's look at what's going on in the market. If you look at our market timing gauge at the top, our market timing gauge is 2 ticks into the green. The color guard is somewhat bullish. VectorVest does advocate buying safe undervalued stocks that are rising in price at this time. So this is our daily traffic light into the market. And right now it's saying it's okay to buy stocks as long as they're rising in price at the time. Now down below, and you look at the market timing gauge, we've got 2 ticks into the green because on our color guard, the 3 market timing indicators we track, 2 of the 3 are in the green. The 3 indicators that are tracked in the color guard are the price of the VectorVest composite, the relative timing or the short-term price trend of the VectorVest composite, and the BSR or buy to sell ratio, which is looking at the overall health of the market. Let's start with the price, and let's move over to VectorVest at a glance. The VectorVest price, or the VectorVest composite price, is an indexed arithmetic average of all of the stocks that we track in the market. Currently, we're tracking 8,271 stocks. Of those stocks, the average indexed arithmetic average of all of those stocks right now is at $48.69. We feel that this price, or this movement, is a better representation of broad market movement because it's looking at this many stocks. Now let me move over to our indices. Right now the Dow is up, and it's up 251 points. Now we always say that when the Dow is up, the market is up. Well, the Dow only tracks 30 stocks. When we say that the NASDAQ is up, the market is up. The NASDAQ is up almost 0.7% today. While the NASDAQ tracks more stocks than the Dow, it tracks about 4,300 stocks, but it's a very tech-heavy indice. All right? And as a tech-heavy indice, say that 10 times fast, Joey. No? Okay. As a tech-heavy indice, a stock like Apple or Netflix or Google, up or down majorly in a day, can affect the NASDAQ in and of itself. So yes, it tracks more stocks than the Dow, but it's very heavily weighted towards tech stocks. We also say when the market is moving up, we look at the S&P 500. Well, the S&P 500 is up about 0.5% today. All right, it's up about 0.5% today. And even with that up 0.5%, the S&P 500 tracks 500 stocks. More than the Dow, yes, less than the NASDAQ, but only 500 stocks. So when we track the movement of 8,271 stocks, we feel that we have a better representation of the broad market movement, and thus we use it for market timing. So let's go back over to our color guard. The price of the composite, how we get these colors. We got a green light in the color guard price column. Why? Because this indicator rose today on both the week over week and day over day basis. Today it's at $48.68. It's higher than it was a week ago at $48.07, and it's higher than it was yesterday at $48.54. This indicator rose on week over week and a day over day basis, so we have a green light. Now the RT, which is the short-term price trend in the market, cast on a scale between 0 and 2. When RT is above the value of 1, the market is considered to be in an uptrend. Below the value of 1, the market is considered to be in a downtrend. And that's because this indicator is cast on a scale between 0 and 2. The higher above 1 it is, the higher or the faster in an uptrend it is. And the more below 1 it is, the faster in a downtrend it is. Currently it's at 1.00. Well, it's higher on a week-over-week basis from 0.97, but unchanged from yesterday at 1.00 as well. So because it didn't rise on both the week-over-week and day-over-day basis, we assign a yellow tile. The BSR, or buy-to-sell ratio, which looks at the overall health of the market. Every stock in our database gets a buy, a sell, or a hold recommendation every day. We look at the relationship of buy recommendations divided by sell recommendations to get this ratio. Above 1, we have more buys in the system than sells. Because that's happening, the market is showing signs of strength. When it's below the value of 1, we have more sell recommendations in the software than buys, and then the market is showing signs of weakness. We are the only ones that are out there that have a true indicator that looks at the overall health of the market. Above 1, the market's got more buy. In our system, we have more buy recommendations than sells. Below 1, we have more sell recommendations than buys. So given all of that information, we look at the color guard. This is a 6-day snapshot of the color guard, whereas the market timing gauge is only 1 day at a time. That was a show on TV, wasn't it? 1 day at a time? Yep. All right. So looking at this overall over the last 6 days, what's the main color you see in the color guard? Yellow. What does that mean? We got a lot of bullishness in the market, but be careful. Now, the market is giving us the okay to possibly buy stocks, but to do it cautiously. Why? Now let's get into what's moving the market, and we're going to get into our first story. All right, Glenn should wear a tie. What? I don't want to wear a tie. What? You agree I should wear a tie?
You should look nicer.
I look good today. Why do I get to put a tie?
I'm glad we got you out of the jersey from me, but
Wow, I don't want to wear a tie.
next level.
I'm not. Then you want me to wear a suit too?
Might as well.
Whatever. Oh, by the way, I got my Michigan cup today.
Go blue.
I should have put on my Duke. I should have brought out my Duke coffee cup today. Carolina had a good game last night. Some cat, whatever his name is.
Go Heels.
Go Heels. No. Tar Heel. Nothing. Not going to say that. Not even. All right. So I was going to say something. All right. Let's get into our first story of what's starting to make the market move in the direction it is. We're going to now go out to our stories. I shouldn't have done it that way, but there we go. That's not what they see, though. Which one I want? This one? Okay. There we go. So this is out of the Wall Street Journal. All right, let's scroll down a little bit. And this is big. This has been a news-driven market for the longest time, okay? And a lot of it has been dealing around or moving around the U.S.-China trade. We know we have tariffs in place. The tariffs are hurting us. Tariffs are hurting China. I think that right now we're at a point of who's going to blink first. And right now, China and the U.S. are trying to come back to the table to talk about these tariffs, but this is big. U.S.-China to remove tariffs bit by bit if partial deal clinched, says Beijing. And if the tariffs can be backed off, that's going to be huge for the market and pushing it up. Not only is it going to be pushing it up, it's pushing it up at the right time. Of what? We have an upcoming election, presidential election, next year. By this time next year, oh yeah, we'll have a new president, or we'll have a returning president, one of the two. So just keep that in mind. Thank you, Claude. I appreciate that. Keep that in mind. So this, in and of itself, is enough to keep the market moving higher. And we're going to take a look at the VectorVest composite on the graph, but this is what's being used to help to push the market higher. Beijing usually doesn't describe how much progress has been made on trade talks, but officials depict a phasing out of tariffs as a hard-won result. I don't need to look much about the story. I really don't. That in and of itself is enough of the story to give an understanding of why the market is moving in the direction that it is. So when we look at what's moving the market, we look at two ticker symbols. One is the VVC, or the VectorVest composite, of which I talked about just a moment ago, and we look at the spiders, because the S&P 500 is what most people look at to decide whether they're beating the market or not. So let's go take a look at those two stocks. Let's go in my watch list of stocks. All right, here's my watch list of all of the stocks that we're going to talk about today. I'm going to highlight the VVC and I'm going to highlight the spiders. Those are the two that we use specifically for gauging what's going on in the market. The spiders is an ETF, so our main indicators, RV and RS, our fundamental indicators, will pop up as ones on an ETF because it's hard to track relative value and relative safety on an ETF. But for those of you who are new, RV looks at a stock's long-term price appreciation potential. Its potential long-term as compared to a AAA corporate bond. You know that when you buy a bond, after it matures, you get your money back and a little interest. Well, when I look at a stock, I can see if it's worth it for me to own that stock long-term or the AAA corporate bond. Again, it's at 1. Relative safety, an indicator of risk for the stock. Relative safety looks at the consistency and predictability of a company's financial performance. Layman's term, does the stock make money quarter over quarter, year over year? Stocks that have high relative safeties are stocks that consistently meet or exceed earnings. Now, these two indicators, that RV and RS, are both cast on a scale between 0 and 2. Above 1 is favorable, below 1 is unfavorable. Our next three indicators, RT, looks at the short-term price trend of the stock. Is the stock in an uptrend or not? Above 1, the stock's in an uptrend. Below 1, the stock's not in an uptrend, or it's in a downtrend. Also cast on a scale between 0 and 2. Our master indicator, VST, stands for value, safety, and timing. See? Relative value, relative safety, relative timing, all matched up into one indicator. And this is our master indicator for ranking stocks whenever you're looking at a group of stocks. So when you're looking at a list in VectorVest, it's not about just a list. It's about a list that will show you the stocks that have the best combination of value and safety and timing at the top of the list, sorted all the way down. That is the power of using, that's one of the many points of power of using the VectorVest software. And then the last indicator cast on a scale between 0 and 2 is CI, or Comfort Index. Well, its name says a lot. It's your comfort level of being able to feel comfortable being in that stock. CI looks at the stock's ability to withstand long and lengthy price declines on an individual stock. Every stock goes up and down. But stocks that are high in CI, that should be a drink, high CI. It's high C, but high CI. Anyway, it should be a drink. Hi, I'm drinking high CI. Go, 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 go. Woo! Anyway, CI is that comfort index that looks at the stock's ability to withstand long and lengthy price declines. Stocks that have high CI are stocks that when they pull back, they have the resiliency to rebound and come up faster than most other stocks. So this is also an important indicator. So the spiders right now have an RT of 1.2. So the SPY or the S&P 500 is in an uptrend as an indice. The VectorVest Composite has an RT at 1. The VectorVest Composite is getting to a point where it's moving into an uptrend, but not quite there yet. All right, the relative value on the composite is at 0.91, below the value of 1, unfavorable. The safety on the VectorVest Composite, 0.86, below the value of 1, unfavorable. But this is positive. I like that the timing of the VectorVest Composite is getting to a point where it's almost in an uptrend. All right, let's take a look at these two stocks on a graph. Move that over. There we go. The VectorVest Composite. So now, with the story going on with the tariffs, the movement of over close to 8,300 stocks, this is that movement shown in candlesticks. Also on this graph, I have a 20-day exponential moving average. Above the moving average, favorable. Below the moving average, you probably need to be out of the stock. Look at the earnings. Earnings is the engine that makes a stock or a market go higher. Look at the earnings per share forecasted over the last year. Man, definitely in an uptrend. This kind of news about the tariffs is definitely affecting the market as a whole to the upside. Let's move over to the S&P. Same kind of scenario. Above the 20-day exponential moving average. No earnings on it. Why? Because it is an ETF. I do like the volume on it, for the most part, moving up. Right now, over the last few days, though, as the market or the SPY or the spiders have been going up, watch the volume. It's telling me that less people are jumping on board in the market. Just be careful with it. It could be a foresign of what could come. Look here. See when the market, here it is, when the market's moving up, and then when it starts to pull down, sometimes it takes some time before it hits, but look at that. Look at that pullback as it happens. All right, so right now, what's going on in the market with the China, U.S. trade talks, definitely moving the market higher. I'm going to close out of that graph. Let's get into our next story. Oh, Joey's pointing to me. That's right, y'all. Don't forget to subscribe, share, and like. I forgot about that. Especially if you like what you see here, if you haven't subscribed to our page yet, do that. If you have other people in your sphere of influence, share this, like it, share it with them. Let them know that you are looking at a company called VectorVest that does a great job analyzing stocks. Put them down with that too. So share with your friends, and of course, like the page, like the videos. And as Joey, I've been asking you guys to do this. Once the videos are out on YouTube, comment on them. That's big for me. I want you guys to comment on the videos. Let non-VectorVest subscribers see what a VectorVest subscriber thinks about the software. Because sometimes the video is the first thing that they ever see about VectorVest. But if they see your comments, let them see what you feel and what you think about the software. That could be the deal breaker for them to either take a trial or not take a trial. All you guys that are here, as much as you are, especially you, Trade Shark, look at these videos on YouTube. Comment on them. Please, I'm asking you to do that because it will help us to grow our footprint. So Trade Shark, if I look and I don't see you commenting, I'm coming to Florida and me and you are going to have some words. You hear that, Joey? Mm-hmm. Yeah. Did you get nervous, Joey? Mm-hmm. Yeah, Joey got nervous for you, Trade Shark. All right, so I told everyone down at the bowling alley, they promised to watch, share, and like. Then we had another round and then they made you pay. Keep telling them to like it, Tom. All right, and tell them to take a trial. Tell them to quit. Don't start with quid pro quo either. Maybe Joey should show us how to comment. Joey, you need to show them how to comment. So you need to comment on the video. There you go. So go comment on one of your videos. Okay. All right, Joey's going to do that for you, Joff. Joey's going to do that. All right, let's move to the next story. Today in the news, we were looking at a stock that made the news. It was up a lot today. It was GoDaddy. A lot of people know about GoDaddy, right? It's what you use for your web hosting. All right, GoDaddy shares surged 10% in after-hours trade Wednesday after the web hosting company reported third quarter results that blew past earnings estimate. So from last night, the earnings came out. Let's take a look at the stock. All right, and that's what's making the stock move up today. That's news-driven. Good earnings, the stock responded. Let's go out to look at the stock. GoDaddy, there it is. So now let's talk about the other indicators within the VectorVest software. We always assign what the stock's price is trading at. Right now, we're looking at VectorVest real time, so it looks like a Christmas tree. The stocks are moving all throughout the session, okay? Stock is currently trading at $72.02. We assign a value to every stock in our database. The value is what we feel the stock is currently worth. Right now, we feel that GoDaddy is worth $20.51. How do we get to that number? Well, we look at our forecasted earnings per share, and we look at earnings growth rate. These are the things that really tie in to what we feel the stock is worth. Right now, we feel that the stock is worth $20.51. The stock is currently trading over value. Is that a bad thing? No. That just means people are willing to pay a premium to own GoDaddy. Now, the next thing that we look at is our other indicators, RV, RS, RT, VST, and CI. Remember, they're all cast on a scale between 0 and 2, where above 1 is favorable, below 1 is unfavorable. RV, the stock's long-term upside potential as compared to a AAA corporate bond. It's below 1 at 0.65. Long-term, I may not want to hold on to this stock because the AAA corporate bond over the next 1 to 3 years should outperform GoDaddy. The next indicator, relative safety, an indicator of risk, the consistency and predictability of a company's financial performance. Well, it's below 1 at 0.81. This tells me that normally when GoDaddy has earnings, it may or may not meet its earnings. Well, last night it blew through its earnings. Normally, though, when a stock does that good, earnings is higher, the relative safety is higher than 0.81. They had a good quarter. With that good quarter, that's a good thing. They made money. So you know what tells me more about this stock? The RT. The relative timing is the short-term price trend of the stock. Above the value of 1, the stock's in an uptrend. The higher above the value of 1, the faster in an uptrend. So now I can make an educated decision on this stock. The news was good. It beat earnings. The stock's price is going up. Today it's up 14.38%. That's beautiful, right? But the fundamentals are not there. Long-term, relative value, relative safety are not there. Not a stock I want to hold long-term, but the RT is above the value of 1. The stock's in an uptrend. Next thing, let's look at the CI. Oh, very interesting. That CI is at 0.35, which means that GoDaddy has the probability, that's not the word I'm looking for. GoDaddy is not as resilient as other stocks when it comes to taking a big pullback. Let me prove that to you. Oh, before I do that, earnings per share sitting at 91 cents. They grow their earnings at a clip of about 19% a year. They're doing well. They're growing their earnings. Let's right-click. Let's view the stock graph. All right, move that over. This stock is more susceptible to pullbacks. All right, notice that the CI is not as high. This stock is not resilient enough. But news, stock beat earnings. Stock's price gapped up today big time. Prior to that, what was the stock doing? It's pretty much in a downtrend. Let me draw a freehand line. What was the stock? Prior to earnings, look at that. Connecting the highs to show you the trend. Let's make this darker. Stock was in a downtrend. News today, blew it up. Great, love it. All right, now it's up. Do you pull the trigger on this trade right now? Well, let's put this on a 3-month graph. If I'm going to buy this stock, I need to make sure that the stock is moving up even higher the next day to confirm this move up. All right, I'm also going to put on the 3 and the 8 exponential moving average, take off the 20. Let's make this a little darker. That's not what I'm looking for. Make this a little darker, make this a little darker, and make that, that's the 8, change the style.
If you drag that over, it should pop up over here.
Is that what'll happen? All right, and let's change the color from the 8, leave the 8 red, and let's change the color of the 3. I don't know why I listened to you, Joey. And make that green. There we go. So now, the 3 and the 8 just crossed on the stock. Boom, went up. All I'm looking for right now is I need more confirmation of the upward move. I love the story behind the earnings. I've got a big wick at the top of the candle, some selling pressure. I got a big wick at the bottom of the candle, some buying pressure. Open candle, I like that. I love the earnings is starting to rise up a little bit. Love the volume. I need more confirmation, though, after the gap up. I'd like to see some possibly moving up higher. And if that's the case, put in a buy stop order about 12 cents higher than the high, helps you to make sure that you're buying into a rising stock. All right, let me see what comments are coming in. I'll bring my membership in here next. You got it, Rich. There you go. I like that. Glenn, how does VectorVest calculate value? So is again, hopefully I made that known. Value is calculated off of earnings per share as well as earnings growth. Does a company, do they have positive earnings, number one, and our earnings are forecasted 12 months out. That's number one. Number two, do they grow their earnings? So I look at those indicators, earnings per share. Notice earnings per share is low on here on a $63, on a $71 stock. They're making 91 cents. That's annualized. Quarterly, you have to divide that by 4 to get the quarterly number. Do 91 divided by 4. Joey's going to give me what the quarterly earnings per share is on that. But they are growing at a clip of 19%. Joey?
91 divided by 4?
Yeah. Oh, my gosh, you're so slow.
22.75.
22.75. It makes less than a quarter of earnings per quarter. It makes less than a quarter than a quarter. Does that help you out, Robert? Kevin says, Halloween was last week. Why do you still have your costume on? Whoa! Do you see that? Wow, that's messed up. That's funny.
You put him in timeout?
No, don't put him in timeout. Only if Rich says something wrong, put him in timeout. Joff says, more likely than not to decline. Normally, when the relative safety is below 1, normally the earnings tells me most likely the stock will miss earnings for the most part. Jimmy says, it's gapped up into an area of supply. Not only, it's gapped up into an island all by itself, Jimmy. It's gapped up into an area all by itself after it got out of the downtrend. It's hanging out. It needs some confirmation because who's to say that it won't pull back down? Who's to say that it won't pull back down? Tom says, Glenn, Joey, did you see Robert's excellent question? Glenn, I just explained it twice.
Yeah, I think he.
Oh, is it because it's on the delay?
Yeah.
All right. So both for Tom and for Robert, did I answer your question about how we look at value? Hopefully I did. Nobody's answering. I know it's a delay. You broke YouTube again. It's all your fault. All right, let me get to the next story. All right, so now the next story gets into the next saga, or the next chapter of the saga of the Stream Wars. All right, so now Roku stock tumbles as analysts say modest beats fail to justify massive rally. The latest numbers were less impressive than the elevated share price required. All right, so now Roku, who was going to be the first device to have access to Apple TV Plus besides Apple TV, they did beat, but not enough. A lot of hype. Remember, folks, this is the Stream Wars. So I need to say that. The Stream Wars. Now you're going to make that? Okay. And Roku's playing a part. They were the first ones to come out with a device all in one to look at all of the different streaming services. And again, it was going to be big having that Apple Plus as part of it. Though both revenue and earnings came in ahead of estimates for its latest quarter, the beats were smaller than what Roku recorded earlier in the year. The internet streaming company also delivered a mixed outlook. The stock was down 12% Thursday in morning trading. All right, Rich says he just bought a 70-inch Roku TV. All right, so now let's take a look. What else is in the Stream Wars? All right, that was one story on the Stream Wars. What else is in there? Netflix. Netflix rolling out 43 original series in November. That's huge. You know why Netflix is doing that? Because Disney is now getting into this space. What does Disney have over all of these? A lot of content. And they've got access to, or in their vaults, they've got more content than all of these put together. Netflix is rolling out 43 original series in November. That's huge. That is huge. In November, here's what's coming and what's going. Netflix bolsters its lineup as rival services from Apple, Disney prepare to launch. All right, so that's all you need to know about this. But 43 new original series coming out, right? Let's talk about what else is in this space. Disney. Disney reports today. All right, I don't know, it hasn't happened yet, but Walt Disney does report today. Here's what to expect. Walt Disney management has had a lot to juggle lately. You know what else Disney is doing? They're putting a lot of money into advertising. How many of you have seen the commercials on TV about Disney's new streaming service? They're putting a lot of money into their advertising budget. Integration and enormous acquisition, launching its streaming service and keeping its movie, TV, and theme park business firing all at once. Disney is a big conglomerate of entertainment. It has given investors plenty to process as well. Disney is an even larger and more complex than it was a year ago, with different factors underpinning its performance. So, in this, Disney is ramping up. I still haven't seen, the commercials are coming out, but I still haven't seen it yet. I don't know if it's available. I don't think that it's available, but it's coming out soon.
13th, I think.
Huh?
I think the 13th.
The 13th. So they're getting hot and heavy, ramping up. And who else is in this space? Oh, Apple. How about that? Apple, $4.99 streaming services here. How does it stack up against what? Amazon, Netflix, HBO, Hulu, Disney. This is why we call this the Stream Wars. There's a lot of moving parts in all of these streaming companies trying to get your business, my business, and even Joey's business. They're even going after Joey to get his business. And Joey's already saying they're going to get him too. I think that anybody who has kids like Joey does, Joey, you got 3, all youngins, Disney is going to be a good, viable way to keep hopped up kids sitting down, right? Think about it. Looking at a lot of the stuff on Disney. Oh, well, look at that. Blah, 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 blah. And you look at that, and guess what? You keep them quiet for a while. But I think that a lot of people who have families, have little kids, Disney is going to be a way to go. But for us older people, I love my Amazon and I love my Netflix. I have Hulu, but I hardly ever use it because I still do have cable. But my Amazon, my Netflix, my Fire Stick, all of that. I just found out last night that we can actually do YouTube on my Fire Stick. Man, who knows that? I don't always know it, but now I do. But look at that. You know, Disney does have Star Wars. What?
Everybody knows that.
I didn't know that it had YouTube on there. Star Wars is huge. Probably one of the most widely sold series ever in movie kind. And guess what? Disney has it. All right, so now let's look at those stocks. So we got the stories on them. Let's look at those stocks. So we're going to look at Amazon. We're going to look at Apple. We're going to look at Disney, Netflix, Roku. That's enough. So 5 stocks there. Amazon, let's go real quick. $17.99, $7.55, overvalued. People are willing to pay a premium to own it. Apple, $2.60, value, $2.24, a little bit higher over its value. People are willing to pay a premium. Disney, people are willing to pay a premium over its value. Netflix, all of these stocks are going up and up and up over their values. People are willing to pay a premium to own these stocks. Same thing with Roku. Now, the thing about Roku, though, Roku and Disney are the only two that have negative earnings. All right, no, actually, only Roku has negative earnings. Disney is growing their earnings at a negative rate. Let's look at Amazon. Earnings per share, $27, growing their earnings 32% a year. Apple, positive earnings, not growing their earnings, though. Disney, positive earnings, growing their earnings in a negative way, and a lot of that is because of acquisitions, trying to grow that business before they go and release their streaming services. All right? Netflix, growing their earnings 27% a year. Let's go look at the relative value on Amazon. Above the value of 1, good upside potential. Apple, not so good as far as long-term holding. Disney, right now, not so good as far as long-term holding. Netflix, above the value of 1, should outperform that AAA corporate bond. And Roku is just not that good. This stock should not be held for the long term based upon its relative value. Relative safety, stock's ability to meet or exceed earnings expectations. Amazon, most likely will meet earnings. Apple, most likely will meet earnings. Disney, remember, the higher above 1, the safer the stock, the less volatile the stock. Netflix, above 1. Roku, again, another indicator below the value of 1. Is the stock in an uptrend? Relative timing. Below 1 on Amazon, not in an uptrend. But Apple, definitely way in an uptrend. The stock is moving to all-time highs, even if long-term it doesn't look so good. Disney, not quite at our RT of 1, slightly below. Netflix, slightly above. Again, Roku, the worst out of all of these right now, under the relative value way below 1, relative safety below 1, relative timing below 1, VST below 1, and out of the streaming services, Roku has the lowest of all 3. All right, the lowest of all 3. I got you, Kev. All right, now let's look at their graphs. Before we do that, out of the stocks here, Apple is the only buy that is highlighted. Let's right-click. Let's view the stock graph. Let's bring this over. Amazon, 1-year graph. Look at it. All right, still trending down a little bit from the high. Why am I moving averages not up there? It's taking a bit. The stock is trending down. I'd like to see it break through the trend. Let's draw a freehand line connecting the highs. Look at that. It did break through. It did break through. That's a good thing. Let's darken that line up a little bit. Style. Make that a little darker. The stock did break through the downtrend, starting to move up, coming off of this level of a low. Ooh, let me show you a candlestick pattern. What's that candlestick pattern off the low? Dang it, put it on 3 months. What's that candlestick pattern off the low? It's called a hammer. That is called a hammer. Roku has the best CI with all the other bad numbers. How does it get such a high CI? I'm going to show you that in a second, Audie, when we look at the graphs. All right, when we get to look at the graphs. Amazon, though, in the last 3 months, starting to move higher. 3 and 8 are positive. Would love to see the stock take out that 3-month high before I jump on board, but the 3 and the 8 are in place. Let's put on the 20-day exponential moving average. For a longer term hold, it is above the 20-day as well. Let me right click. Oh man, I got a lot of stuff going on. It won't let me right click. That's fine. Let's go to the next stock. Watch the earnings on Amazon as well. Next stock, Apple looks good. All right, Apple, remember long term it didn't look so good because of the relative value, but look at the price action on the stock over the last 3 months. Stock is altogether hitting all-time new highs. The stock's earnings per share is higher than it was 3 months ago, but look at that equity curve. Holy smokes. As far as the streaming is concerned, this is one of the best stocks that you'll see in here. Let's go. Question was about Roku. I'm going to get to that. All right. I know Apple, I'm liking Apple as a trade. Just to let you know that, look at a new high coming off of 3 days of dojis. I'm liking that stock. Would like to see more volume kicking in with that, but I'm liking that trade, especially staying above the 20-day exponential moving average. Disney, same kind of scenario, connect the highs. Stock just got out of a downtrend. All right, starting to move up. Another hammer formation right here. The 3 and the 8, let's see if the 3 and the 8 have crossed. Take off the 20. The 3 and the 8 crossed a couple of days ago and now moving higher. I like this as a trade. You know why? This stock has got good upside potential, at least to that level of the high. It's got at least good, and that would be a good profit target. 140.08, right now at 132. I got some money to make. And guess what? I'm thinking that if the hype is all what it is, when the Disney service, streaming service does come out, the stock has got upside potential. It should take out that level of the 3-month high very, very quickly. How to draw the trend line too far right. All I did was click on freehand line, and I can draw any line anywhere I want to. All right, that's just how you do it. Make sure you have the free line up there. But I am liking that Disney might have a really good opportunity to run up. Watch the earnings, though. A lot of that, though, is a lot of the acquisitions that they've done, a lot of the advertising. That's where the money is going. Netflix, for the most part, is doing what? Moving sideways. Netflix is still the big boy on the block. Everybody's going after Netflix, to include Disney. Disney's going after Netflix with their breadth of content. But right now, Netflix is moving sideways. Earnings per share is moving up. I definitely wait for the stock to get out of its own way. The 3 and the 8 look good. The stock is moving up. Look at today's activity. Look at the big wick at the top of the candle. That's a lot of selling pressure on today alone. No, one day doesn't make a trend, but that's a lot of selling pressure on just today by itself. And then we get to Roku. Now, Roku, the question is, how does it have a high CI? Look at the stock. It pulled back here, but look at most recently. Look at the stock, not pulling back nearly as much as it was back here. CI will be higher because it looks at the stock's ability to withstand longer lengthy price declines. If the stock continues to decline at this rate, the CI will lower. The CI will lower. All right? Look at Netflix's earnings per share. I agree. Earnings per share on Netflix is beautiful. They are making money. Even though they may be bleeding, and I don't know if they're still bleeding subscribers because they did run up on price. I don't know if they're still bleeding subscribers, but that was a big effect back here. When they did raise the rate, they got hit. And since then, they've staved off the downtrend and moving sideways. But the earnings per share, you're right, is absolutely on point. All right, any other, don't forget, oh, and remember, subscribe, share, and like. Don't forget to subscribe, share, and like. Joey keeps pounding that into my head. Comments. Apple, take another bite. Yeah. And that was a good trade. Oh, the Mattel trade, that was last week. I did Mattel last week. Timothy says, Glenn, I showed you how to draw the trend line. Timothy says, draw a trend from a high to a low. I can do that as I look at any of the stocks on here. Roku is consistent. Roku never makes money. Absolutely, they don't. That's why, as I look at Roku in this streaming war, I was thinking that Apple was going to help it to grow. Right now, it's just not there yet. Right now, it's just not there yet. All right, let's go on to the next story. we're going to now talk about season's greetings. In the season's greetings section, we're going to talk about some of the biggest retailers. Walmart. Walmart rushes out holiday deals a week before Halloween. Man, I am thinking that people are going to start, like Walmart, start putting out Christmas stuff after the 4th of July. We're going to get to that point. Do you agree with that, Joey? I think at some point in time, people are going to start talking about Christmas right after the 4th of July.
Pumpkin spice lattes and everything in July.
They're going to pumpkin spice lattes in July. 4th of July, yay! That drinks that pumpkin spice latte. All right, discounts creep earlier into October as retailers prepare for shorter gift shopping season. You know why they're doing this? Because Amazon is kicking everybody's butt online. That's what it comes down to. Amazon is kicking everybody's butt online. All right, so talking about Amazon. Amazon launches its Holiday Deals Specials shopping page. Now, they're trying to keep up with Walmart, trying to get out early. Amazon is doing the same thing. Amazon is jumping out there early as well. Amazon announced its start of its holiday shopping season deals with launches of its Happy Holidays platform. Available through November 21st, the page joins other curated shopping pages like Fashion Gift Guide and the Electronics Gift Guide, the Holiday Toy List, Mariah's Must Have. Who's Mariah? Like Mariah Carey? All right, anyway, that's not how you spell Mariah. I don't think that's how you spell her name.
This is in collaboration with pop singer Mariah.
It is the way you spell Mariah. All right, how about that? All right, so Walmart began offering holiday deals a week ago. So here you go. This is all about holiday season's greetings. What's going on? And you know the people who benefit from it? You. Because everybody's fighting for your business. They're going to fight against each other, and we're going to benefit. I think my wife is going to get me a big screen TV for Christmas. Shh. Don't tell her that I think I know it. All right, another store, JCPenney. JCPenney plots a comeback, less clutter, more yoga classes. What's that all about? A glimpse of the future for JCPenney can be found in Hurst, Texas, where a remodeled store has a fitness studio, video game lounge, and style classes. So guess what? JCPenney has been a company that's not been well for a long time. What are they doing? They're thinking outside of the box. I like that. So when you go to JCPenney's, leave your kids at the arcade, or after you're done shopping, you go to you take a spa class or something like that. I like that. All right, they're thinking outside of the box as a comeback, and I like that. All right, and one more. Look at this story. The drones are coming. How Amazon, Alphabet, Uber are taking to the skies. Flying robots that deliver packages to people's doorsteps are no longer science fiction. Companies including Amazon, Alphabet, which is Google, and Uber Technologies are starting the most advanced trials of drone delivery in U.S. history. How cool is that? That you can get your packages from any of these places delivered to your house by way of drones. Man, the skies are going to be full of drones flying all over the place, and then, man, but that's huge, and it could be a gimmick, a Christmassy gimmick, doesn't matter. But the companies are jumping on board with it. So let's go take a look at those stocks. All right, so we were looking at Google. Amazon, we've already looked at. All right, we've already looked at it. JCPenney, Uber, and the other stock was Amazon. We've already looked at Amazon. All right, Alphabet or Google, trading, it's one of the few stocks that's trading just a little bit below its value. JCPenney is $1 stock. You remember when JCPenney was a big store way back when? It's $1 stock. It's been hurting for the longest time. And actually, like I said, I like the idea that JCPenney is thinking outside of the box to attract shoppers. And Uber, which is over its value by a lot. So remember, a couple of these stocks are, it's a premium to own them. Relative value on Alphabet. Stock's got good upside potential. JCPenney, not there. Uber, really not there. Relative safety, the stock's consistency of making money. Alphabet, it is there. JCPenney, not there. Uber, not there. And of course, is the stock in an uptrend or not? Google is. JCPenney is in an uptrend. And even with the news JCPenney is in an uptrend, and I like that because the news is pushing it higher. It's getting people more active with the stock. The stock is now in an uptrend. And Uber, not so much. Uber is a sell recommendation. JCPenney a hold, and Alphabet is a buy. Earnings, good earnings on Alphabet or Google, growing their earnings 17% a year. JCPenney, negative earnings, growing their earnings negatively. And Uber, negative earnings, growing their earnings negatively. So these are the companies that are looking at drones. They're all trying to get a piece of that pie. Let's go view their stock graphs. Google's going to have the best looking graph. Look at that. Put it on a 3-month graph. Look at that upward trend. Nice up day today. A little bit of a wick at the top. Earnings popped down just a little bit. But love the earnings, love the equity curve. 3 and 8 cross back here. Even on the pullback, still stayed. Volume is pretty steady. Remember, these are the companies that are looking to get drones. JCPenney, even with them thinking out of the box, a little bit of a sideways move. This may not be a bad play. The stock is getting less ugly earnings. All right, less ugly earnings. Stock's price is moving sideways. If the stock can get out of its own way of this little sideways move, you got a good possible upside to the value of about $1.26. And if it gets higher than that, the stock could be off and running, especially with them thinking out of the box prior to Christmas. And these drone sales or drones deliveries might not be a bad way to go. Uber, woo! Uber don't look so hot at all. Man, oh man, baby. Didn't they just lose their CEO? I think they did. I think they did lose their CEO, I think. All right, so pulling back, again, less earnings, so it's getting less bad earnings, getting better. One day does not make a trend. I'm not a big fan of Uber just quite yet. First thing I need to have happen is the 3 and 8 move up. Once that happens, then keep your eye on it. All right, my last group of news. Let's get back into the aerospace and defense. Boeing still making news. It makes news every week. So let's look. Boeing commercial airplanes chief leaving. The commercial airplanes chief is leaving amid the 737 MAX crisis. You know the planes are still grounded. They're waiting for the air people or the FAA to release them from being grounded. Doesn't look like it's going to happen any soon. I don't know if it's going to happen by way of December as they recently thought, but that's big. You got a chief officer within the company leaving because they can't. The announcement of Kevin McAllister's departure comes on the eve of Boeing's quarterly earnings. Interesting. All right. What else is in this plot? Raytheon. How about Raytheon? Pentagon awards Patriot radar deal to Raytheon. That's huge. So, you know, Boeing was a big company in this space, especially because the big commercial airlines, and they got a lot of government contracts probably on hold as well. Raytheon, that's huge for them. It is a $5 billion contract for the Patriot radar deal. So, 2 companies within that industry. Let's go look at some of the other stocks that are in there. We'll look at Lockheed Martin is in there. Northrop Grumman is in there. There's Raytheon. And what's my last one? Boeing. Where's it at? There it is. So there they are. These are all of the stocks within the aerospace, you know, top stocks within the aerospace and defense. Boeing, undervalued. How about that? All right. One of the few stocks that we've seen in our list that is undervalued. Lockheed Martin, undervalued. Look at all of the stocks in this industry are all undervalued. Well-to-do companies, you know, backed up by the government contracts. So these are good companies. Even though Boeing has been hit because of the 2 airline crashes with their new 737, people still know overall the company is a good company. Let's look at relative value on Boeing. Above 1, the stock's good upside potential. Good upside, but all 4 of these stocks. Again, because of that industry and because of these stocks going to have good fundamentals. Relative safety, above 1 on all 4 as well. Timing, which ones are in an uptrend? Raytheon has got the stock that's in the fastest uptrend in this industry, up at 1.25. The other 3, let's see, Northrop is below, Lockheed is below, and Boeing is right at it. All right, but the biggest mover in this industry is Raytheon, and guess what? Because of that contract, stock is up. Stock is only up about 0.4% today, but that contract is really going to bolster that company higher. Let's take a look at their graphs real quick. View the stock graph, move that over. There's Lockheed Martin, put on a 3-month graph, pulling back a little bit. All right, but look at that little bit of a rebound. Earnings still overall higher than it was 3 months ago. Really starting to move. All right, volume is pretty steady. Northrop, not so much. Stock's in a downtrend. Beautiful earnings though. Right now the stock is in a downtrend. Be careful with it. Raytheon looks the best out of these stocks. Look at that nice upward move. 3 and 8 are positive. Love the earnings. If you're going to go with Aerospace and Defense, right now this is the stock to go with. And they just got the new $5 billion contract. And let's go to the last one, Boeing. Boeing actually, with that hammer formation right there and the stock's price moving up to 3 and 8, just crossed bullish 3 days ago. Earnings is higher than it was 3 months ago. Boeing is on a rebound. Boeing is on a rebound. Let's go see what will happen. I think what's going to be big is if these 737 MAXs are not grounded anymore in December. If they still are, that could be some big downside for Boeing. All right, let me close that out. Let me see what comments you have. Don't touch Uber or Lyft, says Timothy. All right. Uber is a high risk. I do not disagree with you. Not to Boeing, go with Canadian Airs. You know, is that, I don't know if that's in that industry, my friend Timothy, I'm not sure. Okay, Tal hitting new highs. Again, I'm going to take a look at stocks for you. Give me about 1 minute. Now you can start typing your stocks in, as a matter of fact. As I read these comments, you can start typing your stocks in the room for stocks you want me to take a look at. Boeing, RSRT, they all suck, says Tim. Yeah, I agree. Oh, you already put that in the room. Look at you. He already put that in. Nobody's listening to you. All right.
Did.
Huh?
Janik did.
Janik. Hi, Janik. How are you? All right. Timothy says, I like RTN for sure. If you're going to look at the stocks in that field, in that space, Raytheon is the stock to look at. Boeing is going to be iffy, especially knowing what's going to happen in December if they're going to unground the 737 MAX. Have a good day, Lisa. Thank you for being here. All right. Now I'm going to open up a new graph. Let's type in your stocks, NPTN. And in case I miss any, Joey, let me know. RUN, comma, MY? Is MY really a stock? No, it's not. Is he messing with me?
Probably.
Probably is. All right, HUI, that's for the gold bugs, comma, SAIA. SAIA. That's a good company. Low,
GKOS.
comma, no. KOS, comma, AL, comma, MED, comma, COMM, comma, WB,
Come on, man.
comma.
You kidding me?
Wow. You know something? I am so not liking you right now, Rich. Wow. Asia. What do you think about PayPal? Is it P-A-Y?
PYPO.
PYPL. All right, MT. Oops.
And HOV.
And that's going to be my last two. All right, I'm going to go through these real quick. Let's go look at them. I thought Rich was messing with me. Put these on a 3-month graph. NPTM, 20-day moving average. Stocks price moving up. Earnings per share just went positive. Watch the volume. I love it when the stock's price goes up, okay? But volume is conviction. I want to make sure that as the stock's price is going up, I want to make sure that people are investing in it. All right, I'm getting less people investing as the stock's price is going up. Be careful with NPTM. I like the stock's price action. Let's go put the 3 and the 8 on. I like the stock's price action. And actually, if I were to jump on board with it, I'm going to give you a line in the sand to get out, which would be right about here. After the stock's price gapped up, let me make that a little darker. That's where if I got in now, the stock is trading at $8.49. I'd put in and buy stop order about 5 cents higher than the high. I do like the price action. But if the stock's price goes against you, I'm giving you a hard line in the sand about 752 to get out in case it comes back down. But right now it's going up. I really would like to see rising volume with the stock. So if I'm in it, leave it alone. If I'm not in it, I really would put a tight stop knowing that the volume is not there behind me. Next stock, Run. I'm not feeling that right now. Stocks price is going down. Earnings per share. Did you give that to me, Rich? I know you did. Volume still higher than average today, says Paul. On NPTM, yeah, it is, but falling, Paul. I'm not going to be able to get past it. The stock's volume is falling. I know it is higher than back here, but it's falling, man. It is definitely falling. And, you know, maybe Timothy is right. If you don't want to put on both the 3 and the 8, you can use the 8 by itself or use the 20. The 20 is going to give you more room to the downside. Maybe you trail with the 8, but I would just put a tight stop on it, especially because I see that volume. And Paul, you know, oh, runners for a short, good. Paul, you know that volume is conviction, man. You know that. I'm not being real convicted with that stock by way of volume. And if run is for a short, good call. If run is for a short, good call. Stock's price is moving, but I want you to see something else, Rich. Look at where it's stopping. You're right at a level of support. Watch that. Now, if that's a good level of support, the stock's price is going to start bouncing up. Just watch that, all right? Just watch that. How about intraday? It stopped right there and didn't go any further. So if you're going to play it for a short, watch the bounce off of that level of support, man. I know the earnings look horrible. That's great for a short. But the stock is at a good level of support. And if it bounces, just keep that in mind. That's all I got to say in regards to playing it to the downside. Next stock, the Huey, the gold bugs. A lot of people are saying that the run in gold is not over. Right now, the run in gold is sideways. The run in gold is sideways. The Huey or the gold bugs is moving sideways. I'm not ready to touch it as a new entry to a gold position yet until it can get out of its own way. See that horizontal line? All right, that's that nice level of resistance. Let's make that a little darker. Yeah, let's get out of that. Let's get out of that territory first. Let's get out of its own way. Good level of resistance here. Broke through. Served as a good level of support, broke through, served as a good level of resistance again, broke through, no follow through, fell down. Right now, where's it trading? Right at that level of 220.10. I'm not ready to put on a new gold position yet. It's got to get me through. And even here, it broke through, had followed through, say, yay, and then boom, it fall down, go boom. All right, just be careful. This is why we use these levels of support and resistance as a way to get out of the trade early instead of riding it all the way down here. All right. It broke through, followed through, get in, that happened, get out. It broke below that trend line. Get out, and boom, you're done. All right, let's go to the next stock. Saga. It is a hot stock, still moving up. Watch that moving average. It just got above the 20-day again. Very indecision today, little doji going on. Love the rising earnings. Just wait for a better opportunity to get into there. Wait for a good opportunity to just wait. Gold got the double tap today, though. Huey making higher lows. Okay, again, I am not going to ever help you guys yeah, it is hitting higher lows, but where's it stopping? All right, the stock could hit higher lows all the way up to that level, and then what? If that's a good level of resistance, what's the stock's price going to do? I want to see the stock's price move up above that. That's where you're going to have your opportunities for higher highs. Here, it broke through and fell quickly. Right now, it's not even getting above it. I love that it's getting higher lows. I need an opportunity, a buying opportunity. It ain't there yet. I don't have a buying opportunity yet. I got speculation. Yeah, it's moving higher. I see that. But I got nothing that says pull the trigger yet. That's what I'm trying to get across to you. I don't have anything that says, yeah, and it's above the 20. But real close to that level of resistance. Let me break through that level of resistance before I do anything. All right? Say we just looked at lows. A little bit of a sideways move. Another situation where higher lows. Where's it stopping at? Very close to the level of resistance. Man, a lot of these stocks that are resistance heavy, you need that confirmation of breaking through. If not, good level of resistance. What happened? Fall down. Got up to there, not quite there. But it's trading again, moving sideways, trading again. Break through that level first. That gives me confirmation. Not that it's just moving up. Hey, it's moving up, higher lows. That's beautiful. That's beautiful. What's giving you the okay to pull the trigger? It's above the 20? Okay. But where is it at? Right there. So even if I get into the stock now, that's going to be my profit target because that's my level of resistance. That's going to be my profit target until it breaks through. All right. There you go. All right. Let's go. I'm all right with you buying it now, but that profit target should be that level of resistance. PAG, Penske was beautiful, moving up above the 20-day, hit a high. I'm not going to quite call that a shooting star, but that is almost like a bearish, a gravestone doji, which is a possible bearish reversal. It got follow through the next day and more follow through now. I wouldn't touch it now. The stock is, if I'm still holding it as a swing trade using the 20-day, or even let's put on the 20-day, holding the 20-day, I'm still okay. But yeah, I would use the 8 to tighten it in, so I don't have to give all the way back to the 20. If it breaks below the 8 exponential, good opportunity to get out and take your profit. All right, get out and take your profit. Stock is moving back after a bearish candlestick formation. Let's go to the next one. Costs. I like that. I like that stock. Love the little U bottom right here by way of the moving average. Nice open candle. I don't like the earnings. If earnings is the engine that drives the stock's price higher, falling earnings is just the opposite. I do like today that it's moving up, very little wick at the top. So a strong up day today, not a lot of selling pressure. I do like that stock right at the high. It's at 729. I'd put in my buy stop order about 5 cents higher than the high. I would stick with the 8. The 8 is tracking the price closer. That way I can get out of it a little faster in case it pulls back. I don't like earnings. Earnings is falling lower on a 3-month basis. Time to take the money on PAG, says me. I agree with you. I agree with you. Janik, you're very welcome, my friend. All right, this is the beautiful thing about putting your stocks in here. All right, these are not stocks that I've had an opportunity to study. I'm letting the software do the work. Al, Air Lease, love the earnings, love the price movement. All right, not a Pearson pair. That's just a bearish candle followed by another bearish candle. Here's the 8 exponential. If you're still in it, use the 8. You can possibly use the 8 as a means visually to lock in profits. You don't want the stock's price to fall below it and still stay in it. Earnings looks good. I love the rising volume here. It's just that now more bearishness is kicking in. So I'm not telling you to panic. If you own it, don't panic. Here's an 8 exponential moving average or even a 20. Either one of those is still keeping you in the stock. The 20 gives you more room to give back more money, whereas the 8 locks in more profit. I like the 8 in this case on a pullback. All right. If you're in it, though, don't panic. Medfast, no. It was going up. That's a bearish harami follow-through. That would have been a good opportunity to get out. And he said, but Glenn, it made some more money. Yeah, and look at it right after that. That would have been a good opportunity to get out. Bearish harami, follow-through, get out. So the stock went up. You say, man, I could have made more money. Get over yourself. All right? Then the stock's price broke through that 8. Look at that. Boom. Follow-through. Earnings looks good. This is a fundamentally sound stock. Not the right time to be in it. Not the right time to be in it. What are you saying? AL, nice. Yeah, I do like that. Just be careful right now. If you're not in it, I wouldn't pull the trigger on it yet. But if you are in it, don't panic. Always yesterday's 8 EMA level as today is live and moves around. Oh, it does. It does. Med is basing. That's basing. It's falling. I'm not calling Med as basing. I'm calling Med as falling. That ain't basing. When it gets to a level of settling in, then it's basing. This was basing. All right. I'm looking at this was basing. Right here. Here. That's falling. There's a difference. All right. Now it's falling. All right. Earnings look good on it though, but not the right time. Same thing with PayPal. Now PayPal had an up day today. Indecision as far as the day is going. I'm not ready to pull the trigger on it yet. I'll even put on the faster indicators, the 3 and the 8. The 3 and the 8 is still negative. The stock still it's creating a new level of resistance, of support right here. I'm not ready to pull the trigger on it yet. Let it bounce, let the 3 and the 8 cross. Let it bounce. Glenn, you're looking at a 1-month graph. Yeah, I'm looking at a 3-month graph. I'm looking at a 3-month graph. All right. I like that it's stopping. I don't have a trigger yet to get in. What am I looking at? I'm probably needing the 3 and the 8 to cross. All right. Gappy stop. MT. A lot of gappiness. Stock is moving up. Earnings is moving down. Be careful with this. Just as quick as the stock could gap up is as quick as the stock could gap down. All right. Gap down. I'm not a big fan of gappy stocks. Zoom out on Med. Go back to med, zoom out. I'll put on a 6-month graph. Still, you're talking about basing. It's still not basing. This is even on a 6-month graph. That's basing. That's zooming. That's a 6-month graph. Put it on a 1-year graph. It's still not basing yet. It's getting close to that level, but it's not basing yet. That's your level of basing, man. That's your level of basing. All right? It's getting close. It's not there yet. All right, so put this back on the 3 months, and you're talking about on MT. Crushed the calls on MT. I gapped up. That was an aggressive play. And you know something? As long as, just as quickly as it can gap up, Rich, it can gap back down. I would take your profit on that and leave it alone. Nice gap up. I would take your profit on that, leave it alone. Where's it at? It's at a new 3-month high. All right, and the last time it was at a new high, what did it do? It gapped down for a minute. It could happen again. Just keep that in mind. All right, last stock, Hovnanian. The builders industry is still rocking and rolling. Right now it's slowing down just a little bit, moving sideways. I'm okay with that. I wouldn't buy it just quite yet. This was the time to be in it when we were utilizing it in the software as a rising industry or a hot industry. The industry has slowed down a little bit. Love the earnings on it, though. Love the earnings on it, but right now, that's basing. That's moving sideways. All right, I'm done. I'm done. And there you go. I agree with the trade with MT, but that is to get in, take your money, and get out. All right? All right, I'm done. Joey, there we go. Today was a good session. A lot of good stocks in regards to what's going on in the market. Don't forget to subscribe, share, and like. If you're new, we really need you to subscribe. And again, and like. Again, when Joey puts these videos out, comment on the videos. Go back to the past videos. Comment on the videos, folks. I want people to see what VectorVest people say about the software. Comment. Go back to the videos and comment. I am trying to do as best a job as I can to respond to the comments myself personally. All right, please go out and comment on the videos. With that, folks, I'm good. Thank you for that. Ashia says, Asia, I'm thinking that's really Asia, says, good show, thanks, keep it up. So is this every week here on YouTube? The answer to that, Timothy, is yes. Every week. What are you typing to me, Rich? Rich is typing me. Look at this. Thank you, Rich. It was you that time. What was it? Anyway, what was I saying, Joey? Like
2 o'clock.
Oh, it's every Tuesday, every Thursday at 2 o'clock. Every Thursday at 2 o'clock. I'm so easily distracted. Woo! Every Thursday at 2 o'clock p.m. So be here or be square. Oh, next week. There isn't one. It's going to be next Tuesday.
Thursday on Tuesday.
Trending Thursday is going to be next Tuesday because I will be out of town traveling to Boston. Any of you who are in the Boston area, I will be going to a VectorVest user group meeting in Boston. It's in Waltham. All right, so yes, I'm glad you reminded me, Joey. Next Thursday, I will be traveling. So Trending Thursday will be on Tuesday. It can't be at 2 o'clock because I got trading.
Ray said he was going to move it or whatever. He was making it happen.
We are?
I thought. Or was it at 11? Did we change the time?
I think we might have changed the time. All right, in order to get on top of it, make sure you hit the bell icon so you can get updated on when we're going to be doing it. But it's next Tuesday, and I think he might have changed the time. It's going to be next Tuesday, I believe, at 11 o'clock. But click the bell icon so you get alerted. Click the bell icon. All right, icon. Thank you, Timothy. I appreciate it. All right, show the picture. What picture? No, I'm not showing it. It's on my watch. It's on my watch, Rich. It's not on here. All right, let's see. Thursday will be Tuesday. What about Training Tuesday? Training Tuesday is going to still be at 2. I think that the Trending Thursday is going to be at 11. It's going to be at 11. All right, folks, my voice is taking it on the chin today. Have a great day. Adios, arrivederci, ciao. Au revoir, sayonara. I'm going to see some of you tomorrow in the Jockey Club. Later.